Ladies and gentlemen of the crypto space, we're live on Monday, May 8th at 11:38 a.m. And today, just like any other day, the story continues. And nothing is changing structurally. Directionality persists. The environment of degeneracy persists. But this environment of degeneracy in a negative sum game that has been going on since the end of 2021, all of 2022, and approaching one half of 2023. I don't think goals will be achieved in this environment. I think it's a hope that financial goals will be achieved, but how could something sustainable be achieved? What's the point of trying to learn, trying to gain expertise in this type of environment? Oh, Tapsy, yeah, okay. I was just making sure the stream was working. Uh, the whole point of engaging with markets is to gain experience, is to navigate markets, is to find sustainability so you could remain in markets, so you could acquire skills to survive and continue to exist in markets into the future. The behavior that you see is not an example. It's not something to learn from. It's something to understand. All right, fine. It is something to learn from. It's something that you should not necessarily do if you wish to survive for long periods of time. It's the story we've been telling for the last several years. Position size, structure, risk management. And as long as the system is to continue to exist, aligning with the system, your capital will grow. And that is shown for the last, well, unfortunately, 41 years. And that is a good argument. It is different this time is unfortunately a potential game changer for directionality in that regard. Asset prices have gone up for 41 years because they have monetized the debt continuously and increased currency supply, which of the last decade, we now have data suggesting there's a very obvious correlation between increase of currency units, especially increase of central bank balance sheets and risk market uh, price, nominal price action, not inflation adjusted. So, is it the case that asset prices no longer are going to follow debasement of currency? But that is exactly what we've seen over the last 10 years. And that the question must reduce to, is the last 10 years forced to continue? And that's where Luke Groman comes in. Raul talks about what he's observed since 2008 with the correlation, 97% correlation with central bank balance sheets, and M2 for that matter. And Luke talks about there's no way out. They must monetize in order to pay bills. If you don't pay bills, there's no credibility left in issuing U.S. government securities. So that is a flywheel unto itself. They must issue those securities to finance continued debt servicing requirements. And if people reduce or lose trust in the purchasing of those securities because we experience a default, then the whole flywheel falls apart. And then we have very different considerations. It's not meme season anymore, and that's post-apocalyptic scenario. So in that regard, the game continues because what are you going to do in a post-apocalyptic scenario? They're not going to want that. They're going to make the modifications and perform the policy adjustments accordingly so the game continues and we don't encounter that scenario. Can you prepare for that scenario? Sure, MREs and bunkers and shotguns and ammo. But that's not the conversation we have. We're not doomsday preppers here, are we? So in fact, our entire conversation is aligning with the likelihood that they're going to continue making policy adjustments such that the game continues. Everyone, and that's where we're at. We're at that degree of a binary outcome. It's either continuation of the game in which our conversation is relevant, Or the post-apocalyptic scenario emerges where the system experiences a significant degree of non-functionality, which means it all collapses, which means you don't have net 30, net 90, there's no credit, there's no business, everything fails, supply chains fail, and nothing works. And emergency measures are taken, like, I don't know what the hell the U.S. would do. I'm talking about redenominating gold and stuff like that, and what the IMF would do because they can't finance shit at a U.S. scale. So and then there's no way to reestablish trust once trust is lost. I mean, we know that firsthand from the crypto markets. So the U.S. is not going to default, and that's coming up really soon. So why are folks engaging in this degenerate activity so close to these critical macro financial conditions? It's beyond me. I'll pop it over to the main screen and show you my sentiment. Sentiment is probably noose. Noose says it the best. Not too late to put down the shitcoin crack pipe. I mean, is that the world we're in where everyone is, we have fentanyl crisis in the States, horrible opiate crisis, and the youth is so out of touch with education and technology and the future and engineering and sciences and math. Such a minority that are interested in that at this point. Maybe that's just my bias of talking to some relatively teenage cousins, which doesn't leave me in a very optimistic, doesn't leave me very optimistic. What's with the gambling? Although I did talk to another teenage cousin, and he's in high school, and none of them know about ChatGPT, and none of them talk about crypto. So I found that very interesting when I heard that from him, because he's actually quite a smart kid, and he's into these types of things like sciences and math and good grades. So, and he knows nothing of ChatGPT except the teachers say don't use it, but he's never used it, never played with it. So I found that very interesting. It's hard to get your head around a total population of an age group. And we see things and hear things on social media that attempt to, express that reality for a demographic component, an age group. And then you hear different things from actual people, and it's contradictory, and it leaves you in a sense of, I have no idea what the fuck is going on. But, that's exactly why we have the conversation we do. We got to find truths. We got to find the foundation. We got to find our own definition of what's occurring, define our own reality of sorts. And that's by making rules. That's by using data to assess the state of things. That's Aura, but let's go over to DXY. So the state of things is that we're approaching such an extraordinary critical threshold. And most importantly, aside from this is what's supporting the markets, I would argue. That's the best way to look at international liquidity conditions in a simplified fashion. Let's go over here to liquidity conditions. So we see this degeneracy going on. We don't know exactly what age group it is. We don't know who the actors are. There's no quantitative way to inspect that kind of information. But we know these transactions are occurring, and we understand the behavior. Is it desperation, or is it just casino gambling? Is there a difference between desperation and casino gambling? Obviously, this desperation and or casino gambling is occurring within a macroeconomic backdrop where liquidity conditions are absolutely draining. That's quantitative at this point. Numbers going down. There's less currency units that people are able to fight over. So, in the end, with regard to degeneracy, if you're able to capitalize, that's a good thing. Is it the naive capitalization where you have no idea what to do with realized gains, or is it the astute capitalization where you have been in this market for 10 years and you're a full-on predator and you're capitalizing on the inexperienced? I'm not okay with those emotional realities. Now, I appreciate the desire to capitalize. I appreciate the concept of capital gains, but that's why it's always unsettling, especially when it's elaborated where the capital comes from. If you pull a 10x on a position, you're taking money from other people in a non-productive fashion. It's a cash grab. We've talked about that. Assets that don't have cash flow, they're not an enterprise, is putting capital into a pool in the center of a table, and the first person to pull out a larger amount of capital, that's your capital gains. It's a game of chicken in countless regards. Cyclical chickenality. It's an interesting way to put it. So I don't like those. I don't like those games. I'm tired of those games. Maybe I'm too old. And in that case, this type of content that I provide is not for what the majority of the market is interested in right now. It's too much damn rationality in these conversations. Too much rationality for it to be popular content. Too much of an old person's perspective. Oh, the horror. We want sustainability. We want a way to engage with markets and not go emotionally insane, become emotionally insolvent. We want to actually survive. Because in my experience over the last 10 years, all you need to do is survive. All you need to do is have assets that are effectively attached to the prevailing narrative. And the prevailing narrative is that politicians want to survive. They want to keep the government functioning. They want to keep the financial system functioning. They want to keep people going to work and the country being productive. They want to keep GDP functioning, positive. They want to prevent the system from collapsing. And in that regard, all you have to do is own assets. And then the question becomes, what assets? And that's our entire conversation. Productive assets, assets that are representative of cash flow positive solvent enterprise. And that's it. That's all you need to do. And that's the entire equation. And then when you multiply that by time, time is the factor. Now the question becomes, when you multiply it by time, it's just the degree of outperformance. And you don't know what's going to outperform in 3, 4, 5, 6 years. You only know that in hindsight. But to me, what I've seen in these markets, outperformance is all you need. And then it'll be interesting which one outperforms more. And also what's going to outperform is obvious. It's the stuff that's productive enterprise, because it has a narrative, because it's meaningful, because it actually contributes to something more than just degenerate gambling over nothingness. It actually provides a potential financial service that helps a business, offers a business credit, extends credit, allowing them to pay employees, allowing them to function as an enterprise, allowing them to grow, buy inventory, build, manufacture, so on and so forth. Be productive, produce their own cash flow, increase currency units in circulation. That's meaningful. That's systemically meaningful. So if that's the narrative we see that has occurred in the crypto market since 2020, you don't have to do much but survive. We already know the assets. Something could come along new, but the new doesn't mean better. New means interesting. You have context now to compare to things that have worked, that have done well, things that have exceeded expectations, things that have contributed to the overall crypto narrative in a meaningful way. But new tech does not necessarily disrupt legacy systems. New tech is not necessarily a good investment. So that's where we are. We're here on a Monday. We discuss these things over and over again. And I think the degeneracy is coming to an end, and you don't need to participate in these things. The only winning move is not to play. That's a quality reference. One other tweet that was in response to me, actually, go figure. So, Chris makes good points. People hate on his take, but that's all about risk management. And if you want to survive, you have to have a risk profile and understand how much risk you're taking and size accordingly. So Sam replied that Frax is going to be very, very, at least multi-sigless. How immutable, we shall see, but it's going to come sooner than later, and that's going to significantly change the risk profile of ownership of such a protocol. And that's quite significant. I look forward to that. Uh, Removing the overhanging risks of a position brings greater comfort. So this is a position I've had basically since it launched, and now I get to, and I found comfort with it, and considering the risk profile of its attack surface, but now I get to be even more comfortable that I made a good choice. And then it took, what, 2 years to realize this type of configuration for the protocol? All right, well, that was the risk. That's the risk that I took, and in hindsight, it turned out well. How much has it appreciated? Not necessarily the case, but in a couple of years, if this becomes systemic infrastructure, then not having to deal with the emotions of shitcoinery, of an actual legitimate product, financial product, you get to have a story. You guys remember when I talked about that thing called dinner table investing? Uh, can you tell an actual story about the things that you own, the assets you own, your portfolio? You know, I remind folks that that is more meaningful than ever, especially with what's going on with the useless assets that are very popular. You can't tell a story about those assets. You can't. There's nothing to tell. It's just you were able to take money from other people, and that's not necessarily a bad thing. That's what they were designed to offer from a functional perspective. But when you look back in 5 years and you're able to tell friends, and a friend, look, there'll be a point in time if you have an appropriate portfolio. In 10 years, you'll be talking about what do you own with friends and family, and they'll say, "Oh shit, when did you buy that?" Can you imagine someone now having a conversation with someone that bought Microsoft 20 years ago? Holy shit, when did you buy Microsoft? You bought it 18 years ago? Holy shit, how did you know? That's the conversation we're having right now. Do you see that equation? We're going to look back in 10 years, and it's going to be very interesting to reminisce on these nostalgic conversations, having the perspective of the future, thinking of what we thought about right now. And you'll have a good story for the dinner table that you bought something meaningful when everyone, all the kids, were doing whatever they were doing. I don't know what they're doing. I don't have time or emotions for any of that anymore. I mean, this is just on another level, the amount of deflation that's occurring. Currency deflation. By definition, currency deflation. All things considered, we have currency deflation for the United States as well. I mean, you know, we've learned so much about the dollar over the last couple of years that we've been talking. We've learned not to hate it necessarily. and appreciate it because every schmuck in this country that runs a store, runs a supermarket, that's what they accept. And you could argue that's because taxes are required to be paid in the denomination. But that's what counts. The game is scored in dollars. And that's why we've chosen the assets we've chosen, because they contribute to this financial infrastructure. It's not as bad as the Bitcoin maximalists say it is. There's a lot of perversions in the system, extraordinary malinvestment, extraordinary corruption, but the dollar doesn't do any of that. That's the policymakers and the government that does that. But the dollar is quite meaningful as a currency unit. It's pretty much usable anywhere on the planet. Even in a country that doesn't want to accept it, the citizens will accept it. So this is what changes your life if you're able to get more dollars. So own an enterprise that pays you dollars. It's going to be interesting dinner table conversations in the next 10 years. I very much look forward to them. Not from a gloating standpoint, but from a foresight standpoint. Because right now we're having that conversation, which gives us that foresight of the future conversations we'll be able to have. Tapsy's in the house. Asmith, I've been content sitting in enterprise exposure for a year now. Feels harder to own non-productive assets. A result is a feeling of overexposure to the curve ecosystem. Any thoughts on that? Yes, don't be overexposed. There's a risk profile to the curve ecosystem. You must be diversified, which is and how do you be diversified? If you owning curve is like owning a pizza shop or owning a shitload of Apple shares producing a dividend that actually pays you. So the whole point is you got to drop the specific asset mentality. Whether it's one asset or another, it's an equation, and that equation reduces to ROI. That equation means you're buying something that's paying you, and the equation is what do you do with the capital that it pays you? So you have to take that capital that is being paid to you and have it in dollar form or dollar liability form, of which there's a plethora of options. And you need to do things that are meaningful with those dollars. Now, obviously, having dollar reserves is meaningful. Purchasing other assets that are productive are meaningful. And then obviously opportunity cost is an extreme component of the equation. And there's a lot of opportunity cost associated with traditional equities that are not necessarily profitable, lucrative, equitable, and susceptible to dilution by subjective human boards. And that shit is why I'm not too interested in those markets. So my argument in that consideration is the crypto markets are the place to be, which means you need to have a healthy cash position, means saving cash. We talked probably mid-2022 when it was like, I'm just taking cash, I'm saving cash. Cash, cash, cash. All your weekly income is just cash. Because look where we're approaching in June. We're approaching a critical point in traditional financial markets. What happens if there's a discount for significant cash flow positive enterprise in the most exciting market on the planet, the crypto markets? You're going to want the cash, and you wish you had the cash, and you wish you didn't buy something. You're not going to have a significantly appreciative crypto market until macro liquidity conditions start to significantly increase. And what does that mean? So this market has been sustained by this. Japan and China. This market has been sustained by Japan and China. So domestic U.S. liquidity and European liquidity has been significantly contracting to the greatest degree in the last 100 years. I've told you guys many time and time again that there's a time when you could buy anything and it significantly appreciates. Now, you could see that in data. But you need a significant increase in liquidity for that to occur. Now, the conversation whether that will occur again, or whether they will pull out the liquidity bazooka, and the Fed does the printer thing that was a big meme in 2020, if you remember. That's a conversation. But that's not now, which means there's a good argument to take your weekly income and not spend it and save it. And maybe, I mean, you really need to treat the income that you make from your assets as income that you make from a job. It's the same exact thing. In fact, that's probably the worst conditioning that kids encounter. That you make money. How do you make money? You make money by working. Fuck no. I wish I could retrain myself at an earlier age. You make money by owning things that pay you. That's such a better way to make money. To own cash flow positive enterprise. I had no one tell me this shit when I was young. And now I tell my 14-year-old cousin this, and he's like, what the hell? Holy shit. His mind is blown. And I can't tell everyone. The extent of what I could tell is folks that listen to me. Your primary focus should be to accumulate companies. I mean, Buffett would say that. Isn't that what Buffett would say? Owning stock is owning a business. But he's not applicable anymore because owning a stock is not owning a business because that's become PVP. Everything past ICO, you don't have significant ownership. All the cash flow is diluted to hell. It's diluted. It's done. It's gone. There's no opportunity. You're subject to the subjective opinion of a human board, which has their own motivations, their own goals and interests. And it's not necessarily shareholders. Why? Look at the dividends. Look at the capital raises. Look at the dilution with the share issuance. They're not paying anything worthwhile. There's no opportunity. So his point is no longer valid. So that really does force us into what many would consider obviously different markets. Would someone consider extreme markets? Would someone consider a market that's a manifestation of just, the financialization of an economy? And sure, that is very much arguably the case, but I think, look, the crypto markets are a manifestation of what was needed to make traditional financials continue to work. And I think, over the years, last couple of years especially, we've determined that this market is significant with regard to its technological offering. Because we've talked about demographics before, in that what this market offers is significantly needed from a productivity standpoint because of demographic changes around the world. Because you cannot achieve what traditional finance needs with traditional labor. Traditional forms of productivity, manufacturing, mining, natural resource extraction and processing, so on and so forth. There's not enough work. There's not enough ways to be productive. There's too much unemployment in the system. We have a crisis of unemployment. And these fuckers go around saying it's a tight labor market. It's a tight labor market in the context of a traditional labor market where it's okay for 50% of an entire country's population to be unemployed. Obviously assuming the numbers are what they say they are, and that's the perspective that we're considering. So based on Fred data, about half the country doesn't work. It's not necessarily contributing to an organized effort. And I argue that that's why crypto markets are so significant, a capacity to have a digital economy, an internet economy, a currency or currencies of the internet where new forms of productivity can emerge and keep people occupied, keep people contributing to organized effort, organized behavior. And I think that's significant. That changes everything. So look, I'm at the point where I'm substantiating my allocations to these markets. I think about it all the time. Am I doing the right things? And I can't really think of any reason why they be the wrong things. Like the arguments why our allocations to the crypto markets are the wrong things are that this is purely a manifestation of financialized economy, and they're going to have to default. They're going to have to continue cratering M2 supply. But then you have the entire story that Luke Groman's talked about so wonderfully that it's mathematically impossible for them to significantly decrease M2 supply. In fact, the entire world is dependent on M2 continuing to go up over time because you have a debt to GDP that's over 100. And that's what Raoul says. So if you have 2% inflation and average interest rates are 2%, you're going nowhere with regard to servicing your debt obligations as a country. The equation doesn't compute from a mathematic perspective. Not necessarily from a sound structural perspective. That equation is kind of scary, but it definitely doesn't compute. And what do we know? We know that they want the system to continue. Boomers want to retire. They want to not work. They were promised not working when they were teenagers. Work for 40 years and you can retire, and the next generation is going to pay for you to sit on your ass and do nothing. I don't know about you, but when I entered the labor force, I didn't look for a pension plan, or I didn't even fucking consider Social Security. Like, yeah, I'm going to retire and Social Security is going to take care of me. No, I entered the labor force in mid 2000s, early 2000s, like from a career perspective. And I was like, I got to work. I got to figure out how to save and buy a house and eventually take care of my kids and save for retirement, 401ks, and invest in the stock market. And it's led us to here. And there's no way I'm ever interested in the concept of a pension or Social Security. I want to be dependent on nobody. I want to be dependent on me. I could do it. I could do it better than they could do it. And that's the whole point. Nobody wants to be, well, I guess some people want to be dependent on other people. I sure as hell don't, and I'm pretty sure everyone that listens to me don't want to be dependent on other people. Let's keep it going with some comments. T2 Sugars, how they don't want that? It would be the perfect excuse to reset, because it's not about reset. Reset is hyperbole. There is no way to drop in a currency replacement. It doesn't work like that. There would be anarchy. It would be chaos because of rejection. If you have 10% of the population that rejects whatever the hell they're trying to force feed you, spoon feed you, it's a catastrophe. Social order would collapse at the margins because it takes the margins. It doesn't take the majority to reject a new idea. It takes the margins. 2% of the U.S. population rejects a failed United States dollar converting to a CBDC, and 2% say, it's a catastrophe. It's post-apocalyptic. So problems arise at the margins and then spread. It's look how a virus impacts the body. First you start to get a little sick. Oh, and then the virus takes hold and you get sicker. That's the same thing with ideas. So if 2% of the population rejects some sort of reset replacement, yeah, that's going to spread really quick. And that's a problem. So it doesn't work. So that whole idea about reset or new reserve currency, it doesn't work the way you think. Especially doesn't work the way Bitcoin maximalists think. That countries are going to go start placing things in reserve. No, countries need to pay their bills. And look at what Russia's going through with the rupee. They're annoyed about the asset that they currently have, or the currency that they currently have, because they have to convert it to something else in order to pay their bills or buy shit that they want to buy, which is basically pay their bills. And Bitcoin does nothing to service the requirements of any sovereign. It's microscopic. It doesn't exist in size. And then people are like, oh, it's got to get bigger. Okay, yeah, we'll check back in 10 years. It's not going to change anything in the short term. And I don't want to see catastrophe. I don't want to see post-apocalyptic. That's not going to be fun. Hey, Dan, what's up? I hope all is well too, my friend. It's been an interesting ride all these, I would say years, but I could say decades. Raul, a pleasure. I'm not the old Noah. It's been a fucking hell of a ride, my friend. Asmith, do you think Ethereum has first mover advantage over a BRC20 future? There is no BRC20 future. The BRC20s are tokens, are shitcoins, just like on Ethereum. Now, there's always the argument, like a Doge, it has a horrible inflation schedule, and with adoption, all of these things are considerable, and Doge could be used as a currency because there's actual decent liquidity, and you could collateralize these assets, whereas with currencies you cannot necessarily collateralize them. So that's long run considerations, and it's especially irrelevant for a new ERC20 shitcoin or a BRC20 shitcoin. It's irrelevant. It doesn't mean anything. It's very interesting, the specification that they created with the BRC20 to make these types of issuance using inscriptions and taproot. It's very interesting technologically, and it's significant what it's doing to the Bitcoin network. And these are major considerations for the far future of Bitcoin when the mining subsidy runs out and it requires transaction fees to finance security of the network. Miners need to be paid. But you realize you're talking about a conversation when you're dead, over 100 years from now. I mean, come on, people. Like, the number of Bitcoin in circulation goes up every single day. Bitcoin is an inflationary protocol. Every 4 years, it's disinflationary, which is significant. Bitcoin, on a time scale that's relevant to your actual life when you're not dead, is inflationary. Disinflation is still inflation. The number of Bitcoin will continue to go up beyond every single person in this room being dead. So I absolutely despise that argument that there's a fixed supply. It drives me nuts. There's a fixed supply when every single person in this room is dead and a complete new generation is having these conversations. Do you really give a shit? Do you really give a shit? Oh my God. Meanwhile, what I talk to you guys about, I give a shit about Friday and owning things that fucking pay me on Friday so I could pay bills and go to a hotel and pay my car and maybe buy a car. So anyway, I'm very interested in what's going on with Bitcoin, especially how annoyed it makes Bitcoin maximalists. I find that quite entertaining. You're attacking Bitcoin. It's not an attack. Listen, the network does what it does, and this is a use case. The whole point, probably the most notable point, is they don't really iterate fast on the Bitcoin network. They kind of try and keep it to the foundational infrastructure. I don't appreciate that. I'm an innovator. I'm a software engineer. I appreciate iteration, change, next generation, next version. So, where the fuck are the developers accommodating this implementation, thinking about it constructively? I mean, look at the use of the network. It has a capacity to finance miners. They probably should consider this in 100 years. How the hell are you going to finance miners when there's no block reward? Oh my God. So they're complaining about it. All right. So I find it entertaining. Raul, do you think the forced selling will be more ferocious than the 3AC FTX events? Now you're asking good questions. That's a lovely question. And the question there reduces to, do you think the low is in? Who owns now? From a Bitcoin perspective, I think the low would be in. I think the only people that own it are, and that's the whole argument of long-term holders and all the shit that Willy Woo looks into from an on-chain metric standpoint. I think the low is in. I would fall into like Raul's camp on that. and forced selling wouldn't produce a new lower low. But you want cash so that if there's a significant drive to the downside, you have a capacity to acquire an additional position if you want. Maybe you don't have enough capital. Maybe you have just a little bit of extra capital that you've been able to save. So maybe it doesn't matter. Maybe if there's a significant depreciative event, you're not able to take action. In that regard, just try and get the emotion out of your system. That whether there's appreciation or depreciation, you can't do anything about it. And that's the position that I love to always conclude any thought experiment that I'm doing. I don't have anything I should be doing. I don't have any changes to make. I need to continue just observing the data, finding conditions and structural patterns that bring me comfort. Now look at this thing. Look at move. Move is still remarkably elevated. But if you remember, I was talking about the TWAP on move when it breaks to the downside. Let's hide the guppy. So historically, when the TWAP on move falls to the downside, you got months of continuation of a decreasing volatility environment for the bond market. So we're approaching such a critical period of time with the debt issuance or the debt ceiling, June, or it's probably going to come to May 25th or maybe the night before for all I know. But the point is, when the volatility starts to come down, that's when collateral starts to be used. When collateral starts to be used, that's when currency starts to increase. Currency supply starts to increase. And that's when you see things like M2 supply start to juice up. So patience is key here. For instance, seeing this chart go up is how you're going to have your assets of interest start to appreciate. For this chart to go up, this chart needs to go significantly down. And I'm seeing the perfect storm because of this structural pattern here. If you see this chart go significantly down, you see this chart find the bottom and start to go up, and you see this chart start to continue downward, you literally have the perfect storm for crypto market appreciation. And you bought literally just Bitcoin, boring ass Bitcoin, you're going to get significant appreciation with those macroeconomic conditions. So everyone's afraid and they call me doom and gloom sometimes. But I see the most incredible setup that just requires patience, just requires time horizon, because those conditions that I just described on move, USM2, and the DXY never occurred before in the crypto markets. Do you understand that? They never occurred before. Look at this. This is your bull markets. This is every teenager that had some sort of shitcoin fantasy or whatever back in 15, 16, 17, and then recently in 2020. This is your bull market. The purple boxes. Do you see these purple boxes? Those were the two past cycles that everyone talks about. It was in a structural dollar bull market. Do you see the blue span starting here in 2008 till this massive blow off top in 22? The crypto bull markets only existed in a secular bull market for the dollar. This structural directionality looks to have changed with a candle like this. Now, why did it change? Look what's going on with the whole de-dollarization narrative. That's a whole other story. But the point is, for the system to continue, note we come back to the system. For the system to continue, the dollar needs to come down in value relative to other currencies, because if the dollar goes higher, it destroys other countries' currencies. So for the system to continue, the dollar needs to come down structurally. So over the next 3 years, and even Stanley Druckenmiller, I learned of what his position was after I defined what I believe. And that's just nice confluence to suggest that, I like my idea. The dollar has to come down, not because it wants to, but because it has to. And the sovereigns know this, and they will make it happen. They just like they made it happen back in '02, just like they made it happen back in '85. And that's our directionality. And that's the next couple of years. So when you see the dollar breach this TWAP to the downside at 95 and continue on to an 87, holy crap. And the amount of treasury issuance they're going to have to do over the next 3 years in order to finance U.S. domestic debt servicing obligations, they're going to have to suppress the shit out of this volatility. When they suppress this volatility, there goes currency supply. Currency supply goes up. There goes the crypto markets and equity markets. But crypto markets will be a multiple of equity markets. That's the deal. Anyway, so the forced selling may present an opportunity, Raul. If you could take advantage of it, lovely. If you can't, don't worry about it. What's your take on the CRV USD collateral being FRX ETH? Why aren't they just using plain ETH? The capacity to use a yielding Ethereum is extraordinary from a structural perspective. I'm quite excited for it. And especially with Sam, and I will remind you of what he said. So the directionality is exciting. This is Noose, and here's Sam. If CRV USD is collateralized by this asset that is going to become increasingly immutable, or at least less of an attack surface associated with a multi-sig, I am excited. I am excited for that dollar liability. I think it will be significantly in demand, especially because it can be collateralized eventually in the future by other dollar liability LP positions. Whoa, curve tokens. Michael has said that himself eventually. So in traditional finance, you're not necessarily using dollar liabilities to borrow, to take on credit, to expand currency supply. But in this instance, LP positions, them talking about it being collateralizable to potentially contribute to the expansion of currency supply is extraordinary from a financial structural consideration. That's quite interesting. Lake, what's up, Noah? You talk about finding the immutable contracts when selecting productive assets. Can you explain what you mean, what to look for when you say immutable? Curve is immutable. Frax is not currently, but they are heading in that direction. Very few protocols are critically immutable. Liquidity, Liquity, is critically immutable. Tapioca is said to be critically immutable upon launch or upon mainnet finally getting underway, but there's no lendiness and it must prove itself. But I'm quite excited for that protocol. And other things are less critically immutable or have less clarity with regard to corporate capacity to influence even a critically immutable protocol. A court order for a DAO where a company has significant ownership, like thoughts come to mind like Aave. What would Aave do in the face of a court order? Look what MakerDAO's done. MakerDAO used the court order to significantly modify the protocol, hack the protocol to gain access to a vault. That's some fucked up shit. That's not critically immutable. Critically immutable means humans are critically removed from the equation. And you own something that will exist no matter what humans do. So even with Curve, like Michael and the devs have significant exposure to CRV, and they could sell countless millions of dollars worth of CRV. They have a significant percentage of ownership. The protocol will still exist, and there'll still be billions of dollars worth of liquidity. That's critical immutability. The humans were removed from the equation. The protocol remains. There is very few protocols in the entire crypto space that are critically immutable. So that really narrows the list, doesn't it? Hope that helps. Like, and the other equation is just entries. What's opportunistic? When's the time to buy? The time to buy is when things are cheap. And I appreciate things that you cannot sell. So that's another story. I'm not going to go down that rabbit hole right now. Young, um, love your rationality, sir. I appreciate. Thank you. When would be some of the trigger events running up to forced selling? Well, look for the end of the month. Look for the TGA starting to refill. TGA, do I have liquidity up? This is liquidity. Let's refresh this page. Hmm. Um, That balance sheet. Treasury General. Treasury General. Liquidity is N minus the RRP. Um, I think I got the denomination wrong, but maybe that does it. And then we could get rid of the trend lines. No. Oh, yeah. So overall domestic liquidity is basically the Fed balance sheet minus the Treasury general account, because when the Treasury account fills, it's removing liquidity from the system. And the reverse repo also sucks liquidity out the system. This is good old-fashioned Arthur Hayes, his idea and observation. So forced selling would be a significant decrease in the amount of domestic liquidity. Why? When you have a decrease in available liquidity, people sell things in order to acquire the liquidity they need. They are forced to sell it. Maybe the bank is not issuing credit, and they have to sell something in order to have the capital they need to pay their employees to keep the business going. That is a perfect example of a forced selling situation. So forced selling is depicted by this chart domestically in the United States when you see a significant decrease in this line, which is the Fed balance sheet minus the Treasury general account minus the reverse repo. You will see forced selling. Now bear in mind the reverse repo, there's plenty of reasons why it could drain. And a draining of the reverse repo market would significantly increase the liquidity in the system and will cause a structural appreciation of asset markets being crypto markets. All right, let's wrap it up for today. I appreciate all of you sticking around to the end. It's good talk. I think, we obviously have plenty of streams remaining until June, but this is definitely a very interesting month, and we'll continue to peer through the bullshit of the shitcoinery, and we'll see the systems that are truly meaningful. We'll continue to talk about them, and I know that might be boring at times, but we're going to have some very interesting dinner table stories in a decade, looking back on these conversations where, we didn't get caught up in the bullshit and we saw something real in a market that is overwhelmingly looked to for gambling and degeneracy. And we saw that there's actually something extremely structurally significant here. 25 people in the stream, 13 likes. I appreciate all of you. Tell everyone to subscribe. I can only help people if they hear this rational voice. After party on Discord for the most rational community in the entire crypto space. I will catch you guys later this week.